Hi there. If you don't like bureaucratic processes, you're not going to enjoy this video. This is about all the formalities of setting up a business, its name, forming a company, and all the administrative hassle that goes with that. Those who like paper shuffling can do this for a living. I don't want to do that, but if I want to run a company, I've got to know how it all works before I land myself in a lot of trouble. So let's proceed and see what we can find out here. Right, now it starts off with knowing your different types of entities. Please, there is no compulsion to form a company in South Africa today. You can go out there and start off your business as a sole trader or with a friend as a partnership. There's no need to register anything just to get going. A business idea can go out on the street, provided you observe all the local municipal authority regulations. So, for example, if you're running a street corner cafe, there might be health regulations, etc., that you might have to deal with. But it's every South African's right to trade, so get on with it. And a lot of people spend far too much money and time in getting on with it and not concentrating on the business. So you can start off as an individual. Then you can be a smart ass and set up a trading trust. Please don't do that. You're not going to do yourself any favors. But as your business grows, you will want to incorporate it into a company. Now, when one goes to a company, you've got to realize that that's going to involve a lot more paperwork in your life and a lot of more pain and suffering. So, we can start off a business tomorrow, and we say the first thing that we need in business is a name. So if you're trading in your own name, you just name your business and get on with it. The only thing that you have to be careful about here is making off on some or other big name in business. So if one looks at examples of this, if you started Presley's nightclub, you'd probably hear from the Presley family in America. They wouldn't be too happy unless you paid them a royalty. But they can stop you from making off on their name. Other big names we know, Coke, Virgin, Gillette, etc. You just don't want to go there with the business name. You might get a visit from that brand name later where they can get pretty angry. So we choose a name and we start business. We actually did have a case involving making off of a name involving an alumni of the Rhodes Business School, Justin Nurse. He did the Black Labor t-shirt, and he took that all the way to Constitutional Court and won that it was his right to do so. They said SAB should get a sense of humor, but it cost him a lot of money to do it. He was proving a point. Just don't go there. Right, so the name of the company, we have to go out there and say, if we now choose to trade through a company, then super regulation starts. You have to then get the name of a company, and then we get the name must be in one of the official languages of South Africa, and there is a regulation 11 and 8 to deal with that. So that's easy enough. No, it's not. Because then comes the no society with things that you can't do with a company's name. So it says the name must not be the same as any other company, either an existing company or a name that's been reserved. Now, a lot of big companies reserve names to stop other people using them. You're entitled to do that. So we have a lot of confusion at the very start of this process in just finding a name for a company that doesn't conflict with somebody else. And then we can't have anything in the name that leads to any of the isms being thrown at it. So we can't have sexism, it's racism, etc., or illegal activities, or anything that is controversial in the religious terms. Now, that can happen quite easily without you even knowing it. So what we have to do is put a number of names to the company's office and ask them which one they'll take. So let's take an example on a rather funny note about what happened to Rodney and Del Trotter. They called themselves Trotters Independent Traders. So when they tried to register that name, the company's office came back and said, look, there are millions of trotters all over the world. You can't have that. So they tried an abbreviation, TIT, which they thought would be Trotters Independent Traders. And the answer came back from the company's office, well, we know you're a tit, but you don't have to put it on the name of your company. Another famous example that we've had on this over many, many years is the name of boats. So this guy wanted to call his boat Titan. Now, obviously, if you try and put that in a company, there are millions of Titan companies. So he tried again, and he called his company Titan Uranus, and the company's office said, we're not having that. In the company's office, you can keep it at sea. And that's where it stayed. So the name of the company must also indicate whether it's a private company or a public company. So private company, it goes Pty Ltd, and if it is a public company, we go Ltd. There are other regulations that we have to follow on this. Some companies have restrictive provisions within their Memorandum of Incorporation. We'll deal with that just now, in which case their name has to go RF. Now, RF stands for ring-fenced. That is a warning to anybody who trades with that company that there might be special provisions applying to that company. The name of the company must first be reserved with the company's commission by way of payment of a fee and lodging the completed form. The commission must first approve the name before you can go ahead and actually register the company. You can't do the two things at the same time, because obviously there's a very good chance when you set up your company that the company's office is going to have something else to say about the name of your company. So we get the new company first, and then we get into the business of saying, right, we've got a name reserved. Now we go to the company's office and we say, we are going to form a new company by filing a notice of incorporation together with the company's MOI. That's Memorandum of Incorporation. Now, the Memorandum of Incorporation is the fundamental document of a company. Anybody who has anything to do with a company, either by way of being a shareholder or being a director of a company, better read that document and know what it says. Because there are various types of Memorandum of Incorporations, and we've got to have a look at them and say, these are the rules to my company, and I better observe them. So the MOI is the constitutional document of the company that governs the nature of its activities. That seems simple enough. And we lodge that with the commission, and they approve it, and they assign it a unique company name and registration number. That allows you to get going. Then, first rule of business, every time you issue a company document, the official documentation registration number must appear on all company correspondence. That's so people can track you down. So then we have to bring that into the design of the company stationery. In addition, the company may make additional rules which it incorporates into its MOI, which is then lodged with the commission together with any changes that may come along with the rules at a later stage. The company can also have a shareholders agreement which governs the relationship between the shareholders. Now, if you form your own company, you can go with a bog standard MOI. You don't need a shareholders agreement. However, where you are going to have various shareholders involved in a company, then it's quite a good idea to have a shareholders agreement which governs your relationship. That's okay. You can have a shareholders agreement, but it can't exceed the provisions that you must have in terms of the Companies Act. The MOI and the rules are then binding on the relationships that exist between the company and its shareholders, between the company and its directors, or any prescribed officer of any company or any person serving as a member or committee of any board. So watch out if you go out there and you suddenly get co-opted onto, say, the remuneration committee. If you're on the remuneration committee, you better know what is in the MOI. So what have we got? We've got shareholders who own companies. The company is then run by its directors and the subcommittees of the board of directors. What we have in the MOI is that we are governing the relationship between shareholder and company, and also the relationship between shareholders, which can be done through a shareholders agreement. The MOI can also go out further and look at the relationship between the board of directors, how many there are, for example, who will appoint them, what their powers might be, and then also the powers and responsibilities of the different little sub-boards and committees. So the Memorandum of Incorporation has all the regulations in it. You can adopt a bog standard MOI from templates provided by the Companies Office, that's just fine, or they can be modified to purpose. Now, I think that what's important with this is that if you are going to modify your MOI, it's probably a good idea to get somebody who really knows what they're talking about to help you in doing that. So, if the MOI is modified and you have a unique MOI, that is valid, yes, but it cannot exceed the provisions of the Companies Act. So, the MOI can include any matter that does not address any unalterable provision in the Act. It can put in more onerous requirements than the Act provides for. What it can't provide for is that you in any way breach the Companies Act. The MOI can have restrictive provisions in it. If you have restrictive provisions in it, please remember that we have to have RF after the name of the company so that that can act as a health warning to the public when they are dealing with the company. Again, that's not something that happens every day. So there's the RF provision, which is the warning to third parties that this is not a bog standard company. Any amendment to the MOI must be filed with the Company Commission. An amendment to the MOI can be done in accordance with a court order or by means of a special resolution or by way of a special resolution of shareholders. That's a 75% majority. Your MOI could have provisions, or your shareholders agreement could have provisions which require a higher majority if you are to change the MOI, but normally it's 75%. The board may make changes to the issued or unissued share capital of the company unless there is a restrictive provision in the MOI or in the shareholders agreement. That would normally be a significant decision in a company. Most shareholders agreement require a resolution of shareholders to achieve it, but sometimes directors are able to change it themselves. But if they are to change it, even with a shareholders resolution or a director's resolution, what is absolutely imperative is that the changes must be lodged by way of a notice of amendment to the MOI, which is lodged with the Companies Office. Then you have to have a registered office for a company. You must have it in one or other place within the Republic, and we must notify the Commission where that registered office is, and importantly, where the books and records of that company are maintained. And we then have to start keeping company records. We have different company records which have to be kept for different periods. They can be kept in electronic format. Some are required to be kept for 7 years and some are required to be kept longer. And now the paper chase starts. You've got to have a copy of the MOI and any changes that may affect the MOI, and those have to be kept for the life of a company. Then we have to have records of directors, past and present, for the last 7 years since somebody last resigned. In fact, in most companies, those records of directors are kept forever. It's very important that if you are a director of a company and you do resign from a company, that you lodge an official resignation and fill out the required forms. Otherwise, you could remain as a director of that company. Then we have to have copies of all reports presented at the annual general meeting. They have to be kept for. Then come the accounting records, shareholders' minutes and resolutions, resolutions adopted at both shareholders' meetings and at directors' meetings, and all documents that have been made available to holders of securities with companies together with any resolutions that may affect them. Securities holders are basically people who lend money to companies on various terms. So a security holder is a creditor of the company. They are not a shareholder of the company. Then we have to have details of any written communications with the holders of company securities, copies of all notices of board meetings and any resolutions that may be taken at board meetings. We have to keep a company securities register and details of the company's secretary and auditors. A company must then have a financial year end, which is set out in its notice of incorporation. It's an accounting period if you want. You can elect which month end of the year that you want. Sometimes you can have a financial period which is actually longer than a year. That's not a regular thing. It happens from time to time, and often only when we are changing the month end that we require for some or other reason. A company must also keep accurate accounting records in one of the official languages of South Africa. So there's your requirement to keep records. It's a requirement in terms of the Companies Act. And there are also various other acts which you are going to have to observe with regard to keeping all of these enormous records. So there, the accounting records. It is an offence for anybody in a company to fail to keep records in the prescribed manner. That would be an offence both in terms of the Companies Act and in terms of the Income Tax Act. It is also an offence to falsify any accounting records that in the financial statements or otherwise. Again, that would also be an offence, for example, in the Income Tax Act. Continuing on, accounting records are going to have to keep records of all assets and liabilities of the companies, loans taken by the directors or shareholders, detailed records of all liabilities and their obligation to anybody else, details records of all properties held by a company, details of revenue and expenditure, statements of any accounts that you may maintain with a financial institution, and so the list continues. Annual financial statements are going to have to be prepared within 6 months of any financial year end. Then the annual financial statements may require to be audited or otherwise subject to annual review. So small businesses would use an annual review, big companies would use audits. Okay, Act specifies the minimum requirement. There are obviously far greater requirements which can be imposed in terms of generally accepted accounting practice. Then you're going to have to complete annual returns. Every company is going to be required to submit an annual return together with its audited financial statements if it has them. Smaller companies may decide not to submit their audited financial statements. A company that is not required to have itself audited may choose not to file its annual financial statements with the company's office. And then there are a whole lot of other red tape requirements. What you've got to realize with a company is that your correspondence with the company's office and the filing of returns with the company's office is just a small part of having a company. They're nothing compared to the requirements that you're going to get when you register for income tax. Then you're going to have to register for value-added tax. Then you're going to have to register for employees' tax. All of these things require records. Now, much is made of this, that this is the red tape requirement that everybody says is throttling business. Despite various attempts by a whole range of people, they haven't been able to reduce the red tape requirements around companies. So for entrepreneurs, they've got to realize that once you go for establishing your own company, you are going to put yourself up on a huge amount of paperwork costs. And you've got to say, is that worth it? The problem is that while you stay as a sole trader, your clients will not really take you that seriously. They want to see a company, but it's going to be an enormous responsibility to run it, and it's going to incur a lot of costs. Now, if you are an entrepreneur, i.e. somebody that works in an existing business. All of this would probably have been taken care of on your behalf by the company secretary or the accountant. If you are an entrepreneur who is starting a new business, one has a load of paperwork to be taken on here. Many people try to save themselves a bit of money by doing all their own company registration requirements themselves. In fact, in the long term, that's costing them a lot of money because they don't really know how to work with the system. It's best to get somebody who really knows their oats and deals with your Companies Act requirements and responsibilities on an annual basis. I'm Matthew Lester at the Rhodes Business School. Thank you for your attention.